The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 7th of October, and we're looking at the Dow down 95 at 42,257. So essentially what we're looking at, if you look at the very simple technique, and the reason why we remain along the Dow is because, look, the 9-period moving average, even on the sharp dip around about the 9th or 10th of September, that 9-period moving average never went negative. It held and it popped up, but it did give a big question mark right here on the 27th of September at 42,628. And in all this time, 1, 2, 3, 4, 5, 6, it's really just gone like we thought it would, going sideways because it's hard to believe in this environment that there are enough buyers to sustain the market, even though there are enough sellers to keep putting a cap on the upside with just modest new highs. But it is new all-time highs in the Dow. So it's very impressive action. So what I'd said is we've got some insurance just in case the market turns down. Most of you have got our long positions. But even more important, I just need to check to see if someone's going to come and do some work on my... Okay, fine. Yeah, I need some work because I can get emails, but I can't send out for about 6 days now. It's been very frustrating. Anyway, that's going to be fixed very soon. So if anyone's been waiting to hear from me, I've tried. It hasn't been working. I am looking at the Dow right now, just down 86 after being down 186 earlier on in the morning. In the futures, that's impressive. Look at the S&P. The S&P right now is trading. It's down 17. It's a lot weaker. It hasn't been able to come back. It's come back from the minus, 29 or 30 earlier on. So that's impressive. But look, it's really just the 9-period moving average. Just what a wonderful indicator it is that it's holding. Now, we do have an insurance based on a very small position on a short of the S&P. It's both a timing model because of that peak C1, C2 with a very tight stop. And at the same time, it's just there because if we start to break on the S&P, any day this week that there's a close, I would put it has to be a little bit lower than that. So it's 56.70. We're at 57.31, so that's about 60 points. But if we do go lower than that, it says, okay, now we're going to get that consolidation. And, I'm really impressed. You've got the election coming up in a month. It's less than a month. You've got Middle East conflagration. It's a 1-year anniversary today. Terribly, terribly, terribly sad. We've got the oil is spiked up. And look at this. This is the TLT. The yields are going, look, the bonds are going down sharply. They're testing the left side low of August at the 94 level. And here we are at 94, with the low today of 94.89. The low that we're talking about is the low of the 8th of August at 94.84. So we've held it so far by 5 cents. I'm watching this very closely because you've got a peak E in the daily, peak D. Remember, peak D is where you've got to be careful. If there's a pullback at a peak D, you've got to be careful. And there is. The 9-period, though, has been very strong in the weekly chart of the iShares 20-year Treasury bond ETF. The monthly chart has gone to a leg B, and it's kind of struggling. And it's not a great chart pattern. So look at this. Yes, the TBT. The TBT, only a leg B on the upside. I'd call it a gray B, but it's really a blue B. I have to call it a buy signal. I don't know if it's upgraded yet to a buy mode, even though the stochastic is at 90%. Just because of those gaps, I have to wait. I want to wait the day before I confirm that the buy signal has gone to a buy mode. And the weekly chart has broken nicely to the upside, but that 9-period moving average, you'd have to see you're at 3.164%. You would have to see this up in that very ugly candle of it was July 30th or something. Oh, so it was August the 2nd, that it had a high of 33.45. You'd have to be close to that level for me to see the 9-period moving average get very close to turning positive. And even then, it would probably have to be there for about 2 weeks. That's a weekly chart. And the monthly chart, this month, the 9-period moving average, the month has only just begun. So we'll see what happens. But it has gone S, meaning south. It means sell signal on the monthly chart, but you have to wait for the end of the month before you can confirm it. But that's a negative. And that's just saying yields are going higher. So it's really quite impressive that you should have this kind of a move in the market, and it speaks to a number of things. I don't want to get into that right now because I want to finish the story with the QQQ, NDX 100 trading vehicle, sideways move. The peak D was lower than the previous peak of 503.32. This is struggling, but it's not breaking down, but it is struggling to make higher highs. And the weekly chart is at a gray B, 76% in the stochastic. MACD's not yet crossed positive. Watching this very closely, and the monthly chart is at peak C. It should go to a D in 2024. So that's the story that we're looking at there. IWM, the Russell 2000. Well, money does come back into the small caps in various stages and various ways, because there are a lot of the oil service sector in the small caps, the Russell 2000. However, look, here's KRE. So KRE is the, let's call them small caps, of the regional banks, S&P Regional Bank ETF. It's had a pretty decent move, but it's kind of stuck. And the IWM has a number of regional banks. I mean, I can just offhand name a whole bunch. But in the meantime, they have rallied and then they've stalled. So that just says to me, I'm putting them in the same category. When you finally see the regional bank, not the XLF, that's the select, those are the money center banks. They've had a fantastic move, a little bit of a digestive phase, although I must say our Bank of America is still doing very nicely. But here we are with the regional banks, and some of them are not that small, let's face it. But in banking terms, these are just regional banks. You need the regional banks to be moving. I don't want to see the regional banks stalling. It's really important. So we've run out of time to use my left side, right side price time match in the monthly chart. You've got this month. I can't see this month going from 55 to 65. So my suspicion is that this is going to have to be renotated for the price action of the monthly chart. But yes, at 55, I do not want to see it close under 53 in the next week. I would like to see it close above 57.80, and that'll be nicely in the 57s. That'll be a positive. Let's get back to our story. Our story is the SMHs, the semiconductors, are down 57 cents at 247.25. They've stalled. 283.07 was the all-time high back in July. Slumps down to the 200 level, comes back very nicely to 247, but it's not going anywhere, but it's not breaking down. So that's just saying to me a digestive phase is going on in the semiconductors. That's a good sign. But the constant buying that keeps coming in. Look at the E-mini. Look at the way the E-mini has come back from a very weak open earlier today. Here it is at 557.84, only down 15. And it made a new recovery.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back. Basil Chapman, Tiger Technicians Hour. Dow's down 84, S&P's down 12. Everything's coming back. Look at this. So this is the 10-minute E-mini. So I initially had this as a phantom peak right there, and it went to peak A, B, C, which would have been technically B, and then it went to a D. So I moved this over to show that I had used a fake A, a phantom A, that is, and very often it still goes to the D. And then all I do is I move everything over, but I keep the pink to say, hey, that's what I had used. And look how the 9-period moving average in the 10-minute chart, when the price came tumbling down, held beautifully. So now you've gone to an E in the 10. This has to be a brand new, I can't believe I'm saying this, a brand new leg B in the 5-minute chart. So this is like a monthly, weekly, daily. So call this the 5-minute chart, which it is. It's only in leg B. I can't believe this. I mean, if you trading purely technically, you just stay long there. You have to get out right there, then back in again. And it's just hard to believe. And the 1-minute chart has gone to a peak D. This says it should still go to higher highs. Amazing, huh? In these conditions, you've got a whole bunch of things going on that should be negatives. And look at this. You've got, so SMHs, I'll talk about this just briefly to say that I think there's an upside cap. Oh, I wanted to do this the other day. I'll put it down here so that I see. Do Chapman wave auto levels. Okay, that's there. So I'm going to do that. I'll do that in a moment. I'm just thinking 260 on the upside is really, I think, maximum in the next week or two for the SMHs. But how it holds 230, it's at 247 right now, is going to be really important. If it breaks 230, then 222 is a 200-period moving average. But we go step by step. So far, everything's holding sideways. That's impressive. So I wanted to say, look, you've got the yield screaming to the upside. And a question in the den was, and I'm not sure why I was chosen as the person to explain it. YOY said, Basil, could you explain interest rates in reference to government bonds? If Fed is pursuing lower rates, but rates pop hard like today, well, is that because the folks bidding hold back purchases, in effect demand more yield, and the government wants their money and meets them? So I think I'm just going to answer the question by saying I think you've pinpointed a good part of that. But the other is, don't forget that the Fed is looking at the bigger picture. They have a mandate, and that's their charter. The interest rate on the shorter term is dictated by market conditions. So you've got to separate the two, and then they come together. Then they separate, then they come together. So all I can say is that the longer term, let's call it the 30-year bond, TY, let's just go there. You can see that it's plunged from a peak C1, C2 top in the 115s down to under the 200-period moving average at 112.5. And it's a peak E in the monthly. That just says, oh, those yields, they look like that. And I've been saying this for a while. I think yields are not going to the lows that everyone's talking about. I think they're actually going to hold steady or go higher in a very fluctuating way, so that there are these swings. But the impetus is that even though they should go lower, the overall result is that as I'm looking at it now, I think that yields are tending towards the high side, and it's these drops that occur that give the market optimism. And you can see that by Toll Brothers right now down a point. It was down sharply on Friday. I think that Toll Brothers is starting to make some kind of a top here. That's really the proof of the pudding for me. Okay, as I say, I'm just not an expert. I'm not even close to an expert in this area, other than I've watched them for years and years, decades actually. So there's this kind of a separation, and then there's a coalition. So now I wanted to also go to something else. So the dollar, is down 5 ticks today, 102.44. A very strong single leg 8 to the upside because it made a lower low, that trough D. It hit the Chapman inside track propellant zone. Whoosh, it came up and has closed twice now. This will be the third consecutive session. That's what I always say. 2 out of 3 consecutive sessions I want to close above the arch high when you've got this dreaded H pattern that goes to an M, lowercase m. So it's done that. And that just says if at any point the dollar starts to trade at 103.05, that 103.39 200-period exponential moving average becomes a focus. I don't want to go there just yet, other than to say that it is a huge move for the dollar, but we tend to see that if you look at the monthly chart, it just says ho-hum, dollar's in a trading band, it held the support, now it's going towards the middle, and that's all it's doing. It's not a big deal yet. If you look at the Bitcoin, BTC, very strong move here. What I was talking about last week was that this Chapman inside track repellent zone in the weekly chart that said back in March going into April, I said, I think that we're looking at Bitcoin having made a fantastic move from the 20,000s up into the 70,000s, and that now it's going to have a well-deserved period of rest. And all I can say, if it breaks 48,000, it's going to go much lower, but it might just be in a trading band with lower highs and much lower lows. And then we'll see if it has the falling axe pattern that says, whoa, V-shape or cup-shape formation as you take out the upper trend line. And that would say not a spike, but a close above 69,000, is trading at 64,730 right now, is needed for the Bitcoin area, that's the whole sector, to start to move, to make an illusion that said, I've been in a down mode, now I've reversed, and the arch or the V-shaped pattern is starting to move to the right, and the right should see higher highs and higher lows. We're not there yet, but it's trying to do that because it's up 1920 today. So I hope that helps you with the question about the Bitcoin. Yes, now Bitcoin on a very short-term basis, it didn't take out the low that was made in the 53,000s with this move from peak E at 66,800-ish. Now, what will happen is if Bitcoin closes not just a fraction above 67,135, which was the high on the 27th, but in fact goes to 68,300, nicely into the 68,000s, that's really going to help the weekly chart, because a move into the 68,800s kind of takes it out of this very strong repellent zone, and that becomes a propellant zone if that occurs. So key support now is 59,700. All right, did that. EUR, USD, gosh, I'm doing a lot of things here before I get to my questions. That went to a peak E right there. Forgot to put it in, the euro right there, E. And then we came tumbling down. And the euro is at 1.09. All I can say, and that was a peak F in the weekly chart. Yeah, the euro looks like if it breaks 1.093, then the 1.090 200 period moving average comes into play. USD JPY, as we go to the break, is moving to, it's too late, I put in the wrong place. I'll be back in a moment. Dow's down 111.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So we're looking at Adobe. A question came in about Adobe. Yes, someone mentioned it to me, and now I remember it, but I completely forgot. There was a 500.00 round number low back in early August, and then it just ran all the way to the 580s. And now it's come all the way back, and it's at 499. Yeah. Good morning, Basil. I hope someone pointed out the low in Adobe around August 7th, precisely 500.00, about as round as you can get, and it resulted in a straight line move up almost 15%. Wish I had noticed it then. McGuppy, yeah, I agree with you. And funnily enough, I lost the notations on this one, and I followed this one just forever. But this is telling me a story here that, as I say, in the software industry, a lot of things are happening. You've got Microsoft kind of going nowhere. It's not looking like Adobe because it's up near the highs, but it's really going nowhere. It's right on this uptrend line support level, whereas you've got something like a Meta, also Mega 7 in this case, or Mega 6, whatever you want to call them. Adobe's not in that category, but I'm just saying it's always been a fantastic company, making a top right now at a doji leg. Yeah, I say top, I shouldn't have said that, but a potential reversal at this particular point with 502 was the high today, 502.95, opens at 598.22. And I'm going to be watching this one closely because, can you believe, 596, it hit 88 back in I think it was November or so of 2022. Wow, I mean, this is quite a move. You can do a one-to-one, you can do anything you want, but this is still only a leg C to the upside. It still has higher to go. What did we do with the Microsoft monthly chart? Microsoft was already got a peak E and is holding steady. So this is negated. This instant restart right here can't be, because you went much lower after that peak E. This is the look of a peak E, and it says consolidation. At some point, it should go to another all-time high, but it needs to rest up at this particular stage. So here's a couple of questions that came in. Let me just check on this one. So before I go any further, I'm going to just say this every week, every day this week. I really, there are a couple of regulars that we've had just forever, and I just haven't heard from, I did hear from one the other day, but out of the three, two of them I haven't heard. And I would like a note, something at least, or if someone knows that they're okay. One is, George from New York, thank you for that wish. Back to you, same thing. So thank you for that note. I can't, until I'm able, in another 2 hours' time, I think I'll be able to send out emails again. The other is Garo. Garo, we haven't heard from you, or maybe it's over a month or more, and I'm upset. Garo from Newport Beach, I know that he was suffering and from cancer, and just sent an email to him, or I sent text, I think it was. Haven't heard back. I just hope you're doing okay. Really, we think of you. We miss you here at the show, calling in. And the other is Ollie from Norway. I think you've changed your address, your email address. I just wanted to say hi, see how you're doing over there. So if you want to just send me a note, I'd appreciate it. All right, so we got that out of the way. A couple of things that we want to do. I had a couple of questions, but I need to get to them now. So one was that Bitcoin. The other is Monster. I say Monster. It's really not Monster. It is MicroStrategy Inc. Trading up again today. Look at that. It had this huge, it just tanked. It went down to 102.40 on the 5th of August. Let me just put that in here. 102.40, 102.40, 8, 5, 24, 24, not 25. And it goes peak A. Under that's a peak A right there. And then it goes peak B. And it goes to peak C. Then it pulls back sharply. That's a gray A right there. That's a gray A right there. Remember, this is your starting point right here. So every peak must be counted. You want to get to the top correctly in the Chapman methodology. So this is A, gray A right there, gray B, gray B. And then you go to a C. That C is under the previous C. Now you've got a Chapman wave overlapping wave, which says you should go to a D, sharp D, and then you should come back and probably test the left side lip. Well, it goes to the D all the way there. And what does it do? It pulls back quite sharply, but it doesn't get to the lip. That's at 100, around about 140 right there. 152.35. What does it do? It pulls back to 157.02. It doesn't get there, but it did pull back. Now it's in a leg. I'm calling this a leg E. Could be a I might rename it, but right now that's an E. Okay, so now you've got a peak F in the weekly chart. That's an A. That's a B because it didn't take out that left side low. That would restart the whole thing. This is under it is a peak A and a peak B, gray A, gray B. Now you've got an overlapping C. That suggests that MicroStrategy should go to a D over. It's a weekly chart, so it can take a few weeks to do that, but you've started the ball rolling right there at about 100, 102 or so. All right, 100. Oh, it's that one there, 102.40. All right. Yeah. So now what we're looking at is the monthly chart's made a peak D. It's a gray A, and that goes to a gray B, and it becomes an E/B if it does it in this particular move, if it goes 1 penny above the high of 200.00. I had that notated, but you can see I even lost the notation that said MicroStrategy, so that's just disappeared. It's a pity that happens. Round number, all-time high. Wow, how about that? Round number. Well, not an RB, but an RN. Round number. Huh. And yet, the 9-period moving average is still so strong. This is a very strong individual. Yes, yes, yes. Okay, next question came in. Selling air. Insurance company. Okay. A to B. Basil, my old bellwether Nike looks quite precarious here. I grabbed some puts near Friday's bounce high. So let's do that. NKE. Am I skipping something? Yes, I am. I'm skipping crude oil. So I don't want to do that. Yeah, Nike, peak A, peak B, peak C could be an alternate count because it never took out that low. So that could be, this becomes E/A, F/B, G/C right there, the 200-period moving average for the Chapman silent doji. Yep, I agree. 81.11. If it takes out 79.50 in the next day or two, I think it goes quite a bit lower. I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So just before I leave that subject, Grayscale Ethereum Trust trading at 21.24, up 73 cents. This has got the lowercase h that goes to a lowercase m. Do I need to do that? Yeah, I do need to do it. So I'll just show you right now what it looks like. This pattern here. Whoopsie, there it is. Find it and click. Got it. This pattern here, I like to look at 3 basic patterns. Straight line up, straight line down, cup formation, arch formation. 1, 2, and 3. You can mix 1 and 2 and 1 and 3. And look at this, 1 and 3 says you go from the straight line down to what we call the dreaded H. It's red because if it takes out the left side low, a lot of things can happen. But what happens sometimes, it holds the left side low and then it makes another rally. Remember what we were looking at that was much, much higher? Oh, that was the TBT, the inverse of the yields, right? That's the inverse of the bonds, that's the yields themselves. Well, if you cannot take out the arch high, which is usually at a peak B, instead you stall underneath it, you can go a lowercase h to a lowercase m, another second arch. Well, lo and behold, we went from a dreaded H, held the left side low, had another one and made a higher low. Now it's got this H pattern. If the ETHE is able to close, it's a big ask because you're going to go from 21.18 all the way, not above this high right here that was made at peak D, under the previous high of peak C. It didn't go to B, it went to actually C, and the other one went to D. It's a full-fledged buy mode, and it's stalled underneath. That's just telling you there's not enough oomph. 23.04 is that high. I would go to the other one, even though you've got to go first to 23.04. The major one is in the next month, 23.29. If there are 3 closes, two consecutive closes out of 3 bars above that high, that says you will fill the gap. Right now, you just cannot fill the gap. It's a problem. So I'm just saying, I think this is stuck in a range. It's a different chart altogether to, say, GBTC, which is the Bitcoin. Look, that made the H pattern very successfully, and they made another one very successfully, and now it's moving. So everything's exactly the same. If you were to take your pattern and just tilt it down, you'd get the D underneath that D over there. This is different. This has made two peak Ds with higher highs and higher lows. This is moving up towards that trend line resistance. That says it's the same thing as, of course, BTC, the continuous contract, the futures. So at 54.50, a close above that, even one close above it, is really positive and says now you're making higher highs and higher lows instead of lower highs and lower lows. So ETHE, yes, it could rally some, but it's really stuck. It doesn't have the same impetus right now. And the weekly chart says the same, and the daily at a peak E says the 9 is still way above the 14, but it's starting to struggle. It needs very much to get to the 23s. When it gets to 23, I think that's a little different. But right now, 21.12, up 61 cents, it's a little problem. Next question came in. Whoops, where did I go? Yeah, hymns. Yeah, you know, I followed this over for quite a while. Maybe it's about 2 years or so. This is Hims and Hers. This is in the healthcare, personal healthcare. Nice move up, big gap. So it was added to the S&P 600. Oh, okay. That's why, because it was really not doing well up until a month ago, and now it's starting to do much better. I think you should, if you're interested in this, to buy it, if you aren't in it already, to buy it here, I just give it a little more time. Let it get, it's 19.54. Let it fill the gap a little bit. Let it get into the low 17s. But I'd say I've missed it if it goes from here by Friday. It even just tags once, 21.60. It's at 19.48 right now. I think this is just a news event from the way I'm looking at it. Okay, next question came in. Where it is. Okay, so, that's different. You've been long since 17. Well, that's great. There's a little bit of a worry over last week when it slipped down to the 16th, but this is good. If that's the case, I would stay, because that means you've got a longer-term perspective. Now it's done. It doesn't matter why. It's done what you wanted, and I would have said you really want to see this trade quickly. Whoops, you want to see this trade quickly into the 19s and probably hold there. Well, it's kind of done there. So that's good. All right, let me just get to this quickly here. Whoops. There it is. Okay. Got that. Yeah. Okay, so another question came in. Sideways pattern, yes. A sideways pattern is you look at up, down, but you can go sideways. That's that narrow rectangle or the large rectangle. You can go sideways for a while. And that's basically what we're looking at. What is very interesting in terms of the pattern. Okay, let me get to this because I'd written it down and I didn't talk about it. So let me just show you something. Look, you've had some spectacular moves. FXI, I got that as a peak C, and I said this should be a D. That's the way it works in the Chapman methodology. A buy signal to a buy mode with a flat stochastic in the 90% area. This is at 95% in the daily chart, and lo and behold, we're in leg D right now. Another gap to the upside, but of course it trades overseas, so gaps don't mean a thing. It don't mean a thing if you ain't got that swing. Oh, I didn't play any jazz over the weekend. All right. So what we're looking at here is there's that arch formation. This is the first month that the iShares have closed over the high that was made back. October was the low, 20.87, and January of 2023, the high was 33.98, and now monthly chart for the first time has closed above, the month is not finished, has gone above that high. It's at 36.36. That is really bullish. It's a good sign, and it's above the 200-period moving average. Weekly chart is a little overextended, so that's the FXI And then the other question came in Queb. Queb, this is the Chinese internet ETF. Multi-chart finally broke out to leg B. Leg D, like the FXI in the weekly chart, leg D, and now it went to an E in the daily chart. I think it's ready for a little bit of a pullback.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So we're looking at the volatility index up $1.53 at 20.74. So what's going on here? We've got, look, the Dow is just how much off the all-time high? At 42,236. 400 points off the all-time high. S&P is SPX.X is off the all-time high. Even just the most recent highs, double top high, 33, 61, maybe 30-something points. And yet the volatility index is looking like, oh my God, we're down 1,000 points or 1,500 points in the Dow. I would say that the volatility index is getting a little carried away to the upside in the sense that the price action is not really worthy of it being at 20.71, but I'm not ignoring it. What I'm saying is that fund managers are buying insurance, and that just says, let's look at the inverse way, and it says if at any point the volatility index, instead of going to 2130 by the end of the day, actually slides and comes down to the 20.20 or under 20, that's going to free the market up to at least try again to move higher. So what I'm looking at is there's this consolidation that's going on. There's a rotation that fund managers are coming in and buying stuff that they didn't buy before. I wouldn't be surprised if the buying goes on maybe another week or so. But we've got to watch out for the end of October, beginning of November, just because normally when it comes to election time, there's a lot of uncertainty and markets get a little shaky. So that's what I'm looking at. So let's just sum it up. We're still long. We're long the Dow. We're long the 3 times Dow. We've got a lot of positions. We have one in a short position as in insurance. Not yet a trend change, but as insurance. I like the fact that the financials are holding steady. That's really important. I would like to see the regional banks move. I'd like to see the IWM move. But they're telling us that this is a very select market. You can see by that action that we talked about a moment ago, one in Nike and the other is, say, in Adobe, different actions. So with that said, a move sharply lower of 400 points is really needed to say, uh-oh,